Greetings and welcome to the Carbonxt Group Limited conference. It is now my pleasure to introduce your host, Warren Murphy, Managing Director. Thank you, Mr. Murphy. You may begin.
Thank you very much, and welcome to everyone on the presentation, and I thank SNN.Network for the opportunity to present. Carbonxt is a pollution control company. We specialise in activated carbon, a medium, if you like, to capture pollutants in the air and water phase, and we are based in Gainesville, Florida, is our headquarters, and we are listed on the Australian Stock Exchange. Long history there, but essentially to do with the origins of some of the technology. In this presentation, I'll go through some of the investor highlights of what we do and why we are, in our view, well placed and moving, I think, to be one of the leading companies in the field that we work in. As I noted, we produce and manufacture proprietary forms of powdered and pelletized activated carbon. In particular, we started out in the mercury and air toxic standards field, which was a legislation introduced about 4 or 5 years ago to capture mercury emissions from coal-fired power stations, and we had developed our own technology to do that, and it's unique in many aspects, and we'll chat through that in a couple of slides. We started out only then when that legislation came in, and so back in 2016 we basically didn't have any revenue. We've moved through to basically produce now about 80 million in FY19, about 16 million in FY20. We'll go through why that it's dropped off a little, but that's effectively COVID more than anything else. Have excess manufacturing capacity. We built a powdered activated carbon plant in Georgia, and we also have a pellet plant in Minnesota. Our growth, however, will come back and strongly in our view over the next year, and we're predicting 40% plus revenue growth off the back of some recent contract wins, as well as the overall caveat, obviously, of COVID not deteriorating any further. We are planning a new product release in the Q2 of our financial year, noting we are in Australia, so listed in Australia, so our financial year is the 30th of June. As we mentioned, or as I mentioned, we're expanding our revenue strongly. We also, at the same time, expect to grow our margins. And there's a number of ways we'll do that, but one of those is just increase reliance on our own manufacturing. And we're starting to also develop new opportunities and transition our business into a leading pellet manufacturer, and we'll talk to you all about that shortly. So moving on to slide 3, I've mentioned most of this already. We started out predominantly capturing mercury from coal-fired power stations. That same sort of technology is also applicable to the cement industry and a few other industrial processes. But really at the heart of what we do is the fact that we have leading R&D capability in the industry. Ably led by our US CEO, David Mazak. There are a number of PhDs in our team, and they have, I think, preeminent capability in the area. Quick rundown of where we are in the ASX. This is a MicroCap conference. That's no surprise to see that that's kind of where we are positioned. About 20 odd million market capitalization. We've just completed a capital raise of $2 million only last month, and giving us an overall enterprise value of around $24 million. Our largest shareholder is Pi Funds, and we've got, for a small company, a pretty good number of institutional investors, and we're very happy with that, and basically wish to see that expand as we get bigger. Board of Directors, Chairman is independent, Matthew Driscoll, long history of small capitalisation companies in Australia. Myself as MD, I have a background in the development and operation of power stations, as well as infrastructure and finance. And David, Dr. David Mazak, who is based in Gainesville, with preeminent background, Professor, University of Florida, and key to many of our technology developments. Moving along, just quickly, what do we do? I talked about the fact that we produce powdered activated carbon and pellets. Activated carbon has been used for many, many years, if not centuries, to purify water. It's effectively high surface area, and you basically engineer that surface area and the pore size distribution to capture a number of different types of pollutants depending on what it is that you're targeting. We typically have contracts for many years. 3 to 5 years is essentially where most of our utility customers are. And by and large, all of our customers are either utilities or very large corporates, and accordingly we essentially have no bad debts. Powdered activated carbon, as I mentioned, we produced a unique product, one that is non-brominated, non-halogenated, and therefore does not cause any form of corrosion. We can inject this directly into the flue gas of a power station, exhaust gas if you like. It captures the mercury, basically attracts the mercury to that carbon, and comes out in the power station mixed in the fly ash, and you treat it as you would normally do your fly ash. We've generated around $9 million in sales in financial year 19, around 8 customers. We have not lost any customers. Our revenue is down a little bit in this sector in financial year 20 as a result of essentially the drop in demand in the electricity generation, most likely because of the drop off in demand. Despite that, we expect this to kick on, and for the economies of scale to kick in, and our revenue and our learnings as we've gone along, and extra volume through this, our facility should see our gross margins push up towards 40%. Pellets is the area driving the fastest growth for us, though. It's essentially the same, in a way, the same product, activated carbon, but in pelletized form. There's a lot more to that than that simple statement, though, which is why we believe we're the only manufacturer of pelletized activated carbon in the US. It's particularly applicable to wastewater and other fluids, and we do see a lot of import competition, typically from China, which I think leaves us very well placed as the transition back home, if you like, for domestic supply continues on, and that happens all around the world. It's not just a US phenomenon, but it is really seen in the US in even more dramatic terms. We are looking at producing all of our own materials to make our pellets. That's still a transition that we're going on, and as we go down that path, we do see our gross margins pushing up above 40%. Key features of that powdered activated carbon I was just talking about: mercury capture, powdered activated carbon that does not contain bromine or halogens. However, one negative of this industry compared to others is it does take a very long time to test, to contract with the utility, so it's not a huge turnover. The counter to that is we do have very sticky customers of long duration. We're currently around 50% utilisation of a 10,000 tonne capacity. A facility we see that the market is over 100,000 tonnes per annum, probably around 150,000 tonnes. So there's still significant market we can move into, but it is quite competitive, and as I said, the sales time is quite long. We do believe we have a unique selling proposition for those customers, but I think it would be fair to say that the speed at which we won those contracts is a little bit less than what we had anticipated originally, and indeed the industry is probably a little bit less in size. Now, having on the horizon, there is a removal of tax credits that may well see the overall market increase, because there is competitive product, if you like, adjunct product that receives those tax credits. So that'll be interesting to see how that plays out over the next year. In our pellet business, it is a much shorter sales cycle. Again, customers are typically large. We do see ability to diversify into lots of different areas away from power stations. That certainly still has a heavy utility feel, but this time in the water industries. Food processing is another thing where we see ample opportunity in the medium term, and we certainly believe that this market can grow extremely significantly. We round the 9 million revenue in FY19, a little bit below that in this current financial year just gone, but we see that materially increasing this year. Our facility was built for a key customer. We built the facility in Minnesota, currently around 70% utilised. We do expect with new contracts that we've been signing that we'll use up this capacity in the not too distant future, and so we have been looking at how we expand, and around 1,500 tonnes, 2,000 tonnes should cost us around $1.5 million US. There is multiple applications and industries that use pellets, which again is great diversification away from the power station industry. One thing that we are very excited about and very proud of is a new pellet product that we've been developing out of our Gainesville team. It's a product for nutrient removal. Florida in particular has been pushing significant legislation to curb nutrient runoff, and we have devised a new pellet formulation to target particular phosphate removal, and have already effectively sold to 3 municipalities and utilities, and we'll be into the second one of those tests very shortly. We hold very significant size and hopes for this product, and we see that it's a product that is not just about Florida. It's certainly right across the US phosphate nutrient contamination market is very large. Anywhere where there's significant runoff of water is a problem, and as well as being in certain hotel, beverage, those kind of industries also have issues. It is competitive in the sense that there are biological solutions, but we believe that our product is unique and has advantages in terms of the vessel design that we are using to release those pellets, and we think that will stand us in great stead as we go through the next few years. One of the things that we really did discover in the midst of this pandemic has been some of the slowing down of supply side. Some of our suppliers have been slow, and more particularly focused on a lengthening working capital cycle because of that. And so we have put a lot of effort in recently to developing a product that takes away those negatives and leaves us in complete control of our own destiny, basically taking away any of those outside components that we use to produce our pellets. We've completed the lab analysis. We're now moving on to commercializing, if you like, in a test arena, these products. It has great opportunity for us to not only reduce that supply chain risk, but significantly reduce our product costs. We're currently in the process of activating these pellets in a kiln and at the commercial level. Like everything we do, it isn't easy. It's got a lot of complications and a lot of know-how and a lot of expertise that's resident in our team. And we believe, though, that we are heading down a path that will be successful and will be, I think, personally, a game changer for the company, and not only significantly increasing our gross margin, but also improving our customization, improving our working capital, and reducing our supply risk, all of which is, has been self-evident, really attractive to us. We will use that product to produce pellets at our existing pellet facility, and we anticipate that product to be available to the market in the last quarter of this calendar year, the second quarter of the financial year in for our company. And moving on to the next slide, just really reiterating the financial performance in the year just gone, as I noted earlier, 30 June. We have not yet issued our audited accounts, but the numbers here are pretty indicative. We don't expect these to change markedly. Our revenue is down a little bit, down to 16 mil, about 10% overall. Gross profit around just over 5 million. We've had a tremendous reduction in our losses, and we are bouncing around break even in our business, and we believe we're transitioning into strong profitability from the second quarter on this year. Why do we go down? I think two main reasons. I've already touched on one. The electricity demand we found has been a significant impact on some of our customers. There's been a few changes in terms of bringing forward maintenance cycles and/or reducing operating hours. But in general, the demand's been down, 8 to 10%, depending on what kind of region we're in. And that's just been a direct, we're a consumable item. I didn't make that clear before, but powdered activated carbon is injected into the gas, and it's consumed. And so if the demand is down, then generally the volume will be down. And also, we've seen a slowdown in business development and just getting to very significant contracts that we just signed over the line. Took more time than we anticipated, but we're very, very happy that we've got those over the line, and we are already seeing evidence of the growth that we think will kick us up in significant size over the next year or two. So with all that sort of negative comment around what we did, between 18 and 19, given 19 and 20, given the strong profile we'd seen between 18 and 19, and we certainly expected it to kick on. We are back on a growth path. We obviously expect to see COVID end like everyone does, and we certainly believe that our activity in that area will kick back to where we were, or close to where we were before. We have, as I mentioned earlier, just completed 2 pellet contracts. We just signed them in June. We expect those to kick in over the next 2 quarters. Seeing some already. We're seeing, what we think will be a material amount kicking in the next month or 2. We do see the growth in the phosphate pellets, but I don't want to give the impression that we're dropping the existing pellet business that we're looking at. What I would call commodity pellets is still a significant part of our growth path, and I would just mention before the kiln activated product that we see as pivotal to that. So that's going to be the transition. We're going to be transitioning through that development, through these new contracts that we signed into an ever-growing pellet business. We do see our gross margins increasing to 40% and hopefully beyond. And we do see the utilisation of our plant. Like everyone, we're trying to work out how we can better utilise our resources, and if we can avoid significant further capital expenditure, we obviously look at that. But at the same time, if we write a whole lot of sales and need to expand, well, it's a pleasant problem to try and solve. We are expecting to be profitable, cash flow positive from the second quarter, and we do see a pathway to significant profitability in the next few years. Just for completeness, it's worth saying that we've greased these are pellets, by the way, just for anyone that hasn't seen activated carbon pellets before. We just completed a capital raise on the Australian Stock Exchange. We raised 2 million Australian, placed shares at 16 cents. A bit of a discount, as is always the case with these kind of issues, on where we've been recently. And I should also say that is reasonably down from where we were pre-COVID, but we are not the only one in that boat. But we're very conscious that we didn't meet our forecasts, and we intend to meet them moving forward and do everything in our power to do so. And we won't remain down at this price for too long if that's the case. We had support of Canaccord Genuity in that raise, and done a great job, and we wish to grow with them as well. Just wrapping up, the board, myself, I'm, as I've mentioned, significant experience in listed companies over the last decade or more, and did run the infrastructure unit for one of Australia's largest investment banks. And more pivotal in all of that was the development of actual power stations, and I've developed all sorts of power stations over the years: coal, gas, wind, and solar. So quite they're across everything and around that sort of area. I mentioned earlier, Matthew Driscoll is our chairman, has significant non-executive director roles, a lot of experience in and around micro and small caps and the stock market. So he's been a very good sounding board for all of us, and that balanced experience is greatly appreciated. And our CEO in the US and the driving force behind so much of our business is Dr. David Mazak. He has a tremendous history in the industry, former chairman of the actual group that wrote the standards for the industry for all of the water that you drink in the US, what's called the American Water Works Association, has developed products for NASA, has been a member of a UN association in and around the industry, and particularly with that emphasis on the mercury capture side of things. He's joined by a stellar team in the Gainesville office. As I said, we have numerous PhDs on staff, and we're very lucky to have them. We're very proud to have them, and we wish to utilise that whole resource of our team to do things differently and better than our competitors, and it's something we are very proud of, and I think will stand us in great stead over the next few years. With that, I've pretty much run to time, so I'll look at if there's any questions. Do have a couple of questions actually. One question saying, pretty simple, why are you not an OTC member? We've always felt that the US expected companies to be a lot bigger than us listed, and I think that's really the key to why we haven't looked at it. But I have been just been contacted by someone suggesting that's what we should do, so we'll have a further look at it. How do we intend to fund pellet expansion as you hit production capacity? What do you estimate as the total pellet market size that you are currently addressing? Thanks, Victor. They're both good questions. I'd like to think that our pellet expansion can be funded by debt, as long as the offtake that we've got is supporting that. I think that will be a preferable way. We obviously conscious of not raising more money if we can help it on the share price, but it'll be what it'll be. When we get to that point, it'll be a pleasant problem to have. What do we estimate total pellet market size? I think that the specific areas we're currently looking at in what we call the CDC or more commoditized market is probably around 40,000 tonnes. The bigger market for replacement of other materials such as granulated activated carbon could be many times that size, and we think that pellets have a great application in that. And our phosphate product will be significantly larger than either of those two. So very, very large markets we're pushing into, very big opportunities, and that's why we're working hard to get products that compete on as better quality at lower price than any import comparison, or indeed if anyone else is going to take it on in the US, which we're not aware of at the moment. On that note, Keith, I think that we better wrap it up. Very conscious we're just about running out of time.